Welcome to the Homeward Bound podcast by the Mortgage Guys, your ultimate guide to navigating home buying and mortgage lending. Whether you're searching for your first home or settling into your forever home, we're here to make the journey simple, clear, and exciting, helping you secure your dreams one home at a time.
Okay, welcome back to the Homeward Bound podcast with the Mortgage Guys. This is Dave Loescher and Kyle Torgerson. We're here in Cedar City, Utah, and we are with Premier Mortgage Resources, doing all things mortgage and talking about all things home ownership. And today, Kyle and I have been talking about brainstorming some ideas just to talk about with topics, and we're going to talk about one today that's, what do you think, Kyle, is the most confusing item in the whole process of closing a loan? What leaves your borrower with most confusion?
You know, that's yeah, I'm glad we're talking about this one today. It's incredibly important. In fact, I was driving my son to an appointment today, and in our discussion and talking about a number of things, I said, well, whatever we got to do, I got to get back by 2 so I can do, Dave and I are doing another podcast. And he was so excited. He always likes asking me about this experience that we have. He said, Dad, what are you going to be doing a podcast about today? I'm like, man, it is going to blow your head off. It's so fun. It's closing costs. And his eyes kind of glazed over.
Did he even know what they were?
No, he isn't. I mean, he's almost 19. No, he doesn't know. And he's just like, that's so people like talking about closing costs. And do you like talking about closing costs? So I told him, like, well, it's an important part of buying a home, and it's something you don't want to glaze through if you're buying a home. It's an important function of how you're affording this home. Mm-hmm. And so, yeah, we're going to talk about closing costs today.
Yeah, and I think the timing of when you talk about closing costs is every bit as important as if you talk about it. We got to talk about them. We got to disclose them, right? In our business, it's like, someone comes in, talks to us about a purchase or refinance or whatever it is, we've got to we have an obligation to a lender that we have a certain, within the first 3 days, we got to get you a disclosure that shows you, your application that you just signed, as well as an estimate of fees. And in the beginning, it might be a little bit of loose because we're kind of, shooting at moving targets. Yeah. But as things start to really fine tune down those fees, those estimates, we kick them out there. But let me ask you this. How often do you think, as a percentage, how often do you think your borrowers, whether you show them to them in the beginning, you send them to electronically, how often do you think they really pay attention to all that?
I wish I could say 70%, but I'd say probably 50% actually read the disclosures we give them. And I love it when they do, and they call me with questions because it solidifies in my mind they're reading it. They're understanding it. They want to understand more. Why is this? Why is that? Mm-hmm. I wish people would pay attention to that. I mean, we have the benefit of DocuSign, which is incredibly convenient, where you can get documents really anywhere and review them on your phone, tablet, whatever. But most of our clients, I would say, are looking at them on their little tiny screens on their phones, which is, like I said, super convenient. But they're maybe clicking through that a little quick. This is a mortgage. I mean,
yeah, exactly. And it'd be better if we can just sit down. Obviously, and in a perfect world, the client would come in. We'd go through things line by line. Yeah. But people are busy often. We encourage them to come in and sit down with us and go over all those things, because the worst thing in the world is get all the way through the process. It takes 20 days, 30 days for a mortgage process. Then you get to the closing table, and if there's something they weren't expecting, something that's a little more shocking, maybe they're coming in with more money than they anticipated. It's our job, our duty to kind of disclose that and make sure they know exactly what they're coming in with. So let's talk a little bit, Kyle, about here's a question we always get: what are my closing costs? And, and that's kind of a loaded question, but it's a short question to a very broad answer. So let's talk about what makes up closing costs.
Yeah, that's a hard question to answer. That's probably one of the typical 2 questions we get most often when someone comes to us for a mortgage, refinance or purchase or construction, is what's my rate, what's my closing costs? And those are all loaded questions. But closing costs are they're somewhat unique to a number of factors. what's our loan amount?
Yeah.
What's your down payment to offset that? And, most closing costs include a number of things that are common, like an appraisal. And we'll get into those different things here in just a minute, I suppose. But they're made up of a number of things that just very basically we have to get bids for or see what the costs are from third parties. Unfortunately, we're not the ones just charging the closing costs. We disclose them, but there's a number of closing costs we actually have to go and get a fee for and figure out how much it's going to cost.
Yeah, and that's a good point. There are third parties involved. It's not always just the mortgage lender. And that's a misconception out there, especially with first-time home buyers. It's kind of like they've purchased a car before. They go to their credit union, they get an auto loan. Well, they close and sign at the credit union. That's where it all ends. And there's really not an appraisal. Typically, they blue book it, but they do that themselves. There's really not a lot of third party in a consumer transaction outside of that credit union or that simple installment loan. But here in the mortgage world, it's like you said, we get appraisal, we have title companies, we have all kinds of things that go into these, and then different programs. In addition to what you just said, different loan programs have different closing costs.
Yeah.
Some of your bond programs, some of your zero down programs, some of these things might have different points and fees that go with it, which can change closing costs.
Yeah. So, typically for a rule of thumb, we advise people to understand that in addition to their down payment, they should plan on, 2 to 3 to even 5%, depending on the program. But 2 to 3% of that loan amount is going to be fees as well. And sometimes, and depending on the market, the seller, if you're buying a property, the seller as part of the negotiation will help cover or would cover, some of the closing costs. But you can't bank on that, know. But so I guess, we have a lot of clients that come and say, okay, my down payment's 5%. I've got that. This is that. And then we give them a disclosure and it shows, we're collecting your 5%, but we got some more to pay for here, not just the house.
Yeah.
And
did you find, let's go back in time a little bit, when we've both been doing this a long time. We've seen some different changes in this industry as far as what is a standard. A standard right now is 1 point origination, almost with every different program out there. And what is 1 discount point or 1 point origination? That equates to 1% of the loan amount. That's a standard when someone talks about an interest rate right now. But looking back in time, we've talked about this a number of times. You look back just 3, 4, 5 years ago, that wasn't the standard. The standard was 0 points. It was par pricing. So we did not have to typically charge that or quote that 1%. So, but if there's an additional fee that's 1% of the loan amount in the form of either discount or origination, that can impact the closing cost quite a bit.
Yeah, if you're doing a $700,000 loan for a home, that's $7,000.
Yeah.
And buying a discount point for your rate, that's $7,000 you add right on top of your closing cost, for example. And it can get expensive real fast, unfortunately. Yeah,
and I think it's basically a product, and we've talked about this in previous episodes, it's a product of the rate market. With pricing and interest rates right now, especially historically the last couple of years, they've been higher. And with that, we're trying to be able to give them and offer them as low of a rate as we can. So that comes with a standard of that discount origination in most cases. And that's just not us, that's industry wide. So hopefully we'll get back to a point where that's not the norm. And that would just be an exception if someone wanted to buy the rate down lower. So, okay, we have origination discount. What else is involved?
Well, you bring up something right there that is a common misunderstanding. We have a lot of lenders in the industry that will call it an origination point. And then there's a lot of other lenders that will call that just a discount point. They're not different. Same thing, right?
Yep.
I've had several clients over the years call me and say, well, you're charging me a point, but this lender's not. I only have to pay 1% origination fee. Like, okay, that's not potato.
It is. You're right. So it can either be origination or discount, and that's a percentage. And there's some lenders out there that'll pride themselves on, hey, I don't charge any points, but all of a sudden I have this admin or the success of underwriting or the success of all these other different itemized fees that are just like not based on percentage, but they may be heavy. So there's different ways that lenders can do that, and it gets pretty creative sometimes. But we can try to keep it simple here, which is
we do.
Just basing it on the interest rate we're offering.
But, other typical fees, some apply to us, some don't here at Premier Mortgage. But, origination fee or points, underwriting and processing, which we do have that for us. Our underwriters and processors do like to get paid every now and again. Let's see here. We have third-party fees.
Yeah.
And so that consists of, we're going to get an appraisal report, and we're going to get a bid for what that is. Initially, we may disclose, a certain amount, and then if we get a bid lower than that, we'll shrink that down, right?
Yeah.
Some lenders charge a credit report fee, a title search fee or title fees. And then with that, they have escrow and closing fees, and then there's tax and recording.
Sure.
Those are typical fees. But interestingly enough, the bulk of fees that are charged by a lender aren't for the lender.
Exactly. I was going to ask you, which of these are lender fees?
Yeah.
Because really, when you talk about closing costs, let's just categorize real fast. You have lender fees, you have title fees, you have appraisal fees, and then outside of that, we're talking a little bit about something called prepaids or impounds.
Yeah.
And those actually, by definition, aren't really closing costs. However, when someone asks, what are my closing costs, they kind of want that number too, because they're talking about, what am I paying outside of my down payment, if there's a down payment, what am I paying in fees to get this loan closed? And that the impounds, and those are going to be part of it. So we have, like you just mentioned, you just did a good job going over it. We have our lender fees, underwriting fees, discount, origination, if any of that is involved. And then outside of that, title, you mentioned. We already talked about appraisal. Appraisal is just valuation on the home. We got to pay that third party person. We had an episode we talked about title, but what can you say about title? I mean, obviously we close there, but what else?
Title is important. They make sure that, for a consumer buying a home, you want title insurance, and us as lenders, we require it. And we try to do the best we can, but that title insurance is heavily regulated like every other insurance. They can't gouge. And so shopping for title insurance, you may find $100 here or there to save you, but uniformity across the grid for all title parties is pretty common.
And probably the most valuable thing they do is that escrow portion of it, where they collect all the funds, disperse all the funds, make sure the seller gets their money.
Yeah.
The lender, when we fund, goes to the title company, and they balance everything out. So they're kind of they're the ones dealing with all the dollars and cents and disbursements.
Luckily, we don't have to touch any cash ever.
Then
we just help function and put it all together, that way.
I don't want to be responsible for that. So obviously we have title, appraisal, the lender fees. Now let's transition a little bit into those. Is there anything else I'm missing on there that, or would be any of these fixed fees before we go into those impounds? And
no, I think the only thing that I'd caution a consumer about is if the fees look a little wonky, to really take a minute and shop it. Because can a consumer find better fees somewhere else? Yeah, sometimes they can.
Yeah.
There's going to be some standard fees that we can't get away from. Any lender can't get away from, that title, appraisal, those third-party fees. But, sometimes, and we've run into this over the years, where they're paying a discount point.
That's true.
And they've got a 1% origination. And so sometimes they're getting a little hit, double hit sometimes. And so you got to be careful.
But if someone's really focused on getting the lowest interest rate that's offered, normally 9 times out of 10, they're going to be paying a significant discount point, whether it's just 1 point or whatever it may be.
Or more.
And sometimes even origination would be included in that. But if you want that rate as low as possible for that given market, there's going to be some points involved. So that's a good point. But so when it comes to that, so like a lot of people would say, when they ask about the closing costs, let's just covering the lender fees, the title fees, and the appraisal fee. I mean, as a percentage, typically right now, since most things have 1 point, are we talking maybe 3% of the total overall mortgage amount? Is that a safe guideline?
Yeah, I would say 3% or better.
Yeah.
And us as lenders, we're capped on what we can actually charge for fees.
That's true.
But yeah, as a rule of thumb, 3% or better would be fair.
I would agree. And then the stuff and these are the items that really people I've noticed at the closing table, they say, hey, why do I have, what's this interest that's being collected at closing? And why is there interest being collected at closing? So, I think the biggest thing we can talk about with that is, if you're closing on the 15th of the month, let's just say.
Yeah.
we got to collect interest, right, from that day till the end of that month. And then the nice thing about mortgage is, it's paid in arrears. So basically that first payment, if let's just say it's August 15th and you're closing, they're going to collect interest from August 15th to September 1st. And then your first payment is going to be due not September 1st, but October 1st. So that 15 days of interest that's being collected at closing. Now, if they're closing on the 5th of the month, they're going to collect 25 or 26 days of interest. So it's going to be a little bit, it's going to inflate the amount you come into closing with. So it's going to change what people are determining or assuming to be closing costs because of the interest.
Yeah.
And that's a prepaid, right?
Yeah. And to go along with that, property taxes.
There you go.
I mean, we're coming up later in the year this year. We're in Utah, our property taxes are due in November. And so when we're building out loans right now and figuring out those prepaid expenses, we're saying, taxes are due in November. We got a check to write for this property in November. Yeah. And we collect that as a little bit of your portion payment every month as well. But, we're going to have you come in with some taxes in preparation for paying those in November too. And so is that a fee? No, of course it's not. It's an expense you pay on your home anyway. Yeah. We just help facilitate that, and we collect it up front at closing so that, the taxes are paid.
Exactly. And then we also collect something called impounds, where there's a few months of the taxes and insurance. Yeah. And that's sometimes a little bit confusing for people as well. They don't realize that we got to get that account going to pad it. Mm-hmm. And I think we may have talked about this on previous episodes where people have to, where we're covering their annual property taxes and insurance, we have to basically have enough money in that account when it comes due in a year. And that's why we're collecting 1/12 a month on their payment. But to start the loan, it could be 2 or 3 months that are being collected for your property taxes as well as your homeowner's insurance.
Yep.
So that's...
And one thing I'd add for the homeowner's insurance is, homeowner's insurance, you pay ahead of time. Not like interest where you pay in arrears.
That's right.
Homeowner's insurance, you pay 12 months in advance. Or the whole year up front. Mm-hmm. And so when you close, your homeowner's insurance is due, 12 months of it right there. And so your year premium is collected, and then we start again collecting a little bit every month so that a year from when you've closed, we can make that premium payment again.
Yeah, and with the recent, we talked about homeowner's insurance too and how that's made a little bit of a change lately, with all the stuff going on, fires and everything around the country. With those premiums being higher, that's made also, if our average loan amount is higher and we have 1 point origination or discount, and then if their insurance policy is a little bit higher right now, the overall fees are just going to be a little bit higher. So anyway, it's just something to consider. In addition to what we've talked about, there's that, we call it a 4-letter word, mortgage insurance. No one loves it. We've talked about it before. Mortgage insurance is that one thing where people who are financing more than 80%, putting down less than 20%, typically have to pay mortgage insurance as a policy to protect the lender in the event of a default, right?
Yeah.
So if it's included in there, how much confusion do you see with mortgage insurance?
With an FHA type of loan in particular, that can be a shock and awe for sure if we don't prep them for that, because it's FHA standard is 1.75% of the loan amount, and they don't have to come into the table with it.
Yeah.
But they're going to see that, and it actually is added on top of your loan. FHA is great, does a lot of great things, but that is a line item that you're going to want to buckle your seatbelt for.
Yeah, often that, like you just said, that 1.75%, it's like $5,000, $6,000, $4,000, whatever it is, and they're looking through the line items of things, and they're like, whoa, what's this MIP that says $6,200?
Yeah.
Even though, like you said, perfectly put, it's not added as something they come in with, but it's added to the loan amount. So they're paying for it as a financed item. So that's a good point, and that can be a little bit misleading. So it's really important for a good lender to be able to go over all these things with the borrower so they understand this before having to do a big, massive freak out at the closing table.
For real.
Which we want to typically avoid. So with all these things we talked about, closing costs can be anywhere in the ballpark of as low as $4,000, $5,000 if they don't have origination or discount points, but it can be realistically, you can get all the way up to $10,000, $12,000 or more.
Yep.
Depending on how all of this works out. So sometimes that's a hard pill to swallow for some borrowers that they have to pay that, but do they always have to pay it themselves?
No. I just want to reiterate, no, they don't. It depends on the market, right? Mm-hmm. In 2021, it was very common where buyers were paying their own closing costs because it was very much a seller's market. But in a buyer's market where the seller is trying to incentivize a buyer to look at their home, to buy their home, they may sweeten that pot by agreeing to cover some or a portion of a buyer's closing costs, which can be a huge benefit. And what I'd say with that is find a really great agent that understands when it is a buyer's market and have them help you out with that.
Yeah.
There's a lot of really awesome agents out there that understand the market. And put a plug out for those that understand that. We have a lot of great ones here in Cedar City that we'd happily recommend.
Absolutely.
A buyer's agent can certainly help you save thousands of dollars of your own cash.
Yeah, and not only find you a good deal, but actually work it out so that seller could absorb some of that, making it ultimately they pay less for the home because they got a good deal, plus they got some of those as a seller concession, contributing to those all or some of those closing costs. Great point. So I think, it tends to be a little bit confusing for some people. What are closing costs? What are they made up of? We kind of just went over them from a real high level right here. Didn't dive in super, super deep, but we're happy to explain it to any of our borrowers. I think it's just something that they don't have to be terrified of.
Yeah.
I think it's something that, if it's done right, it can be pretty smooth. And if it's I think communication, like everything else, communication's key. For a good lender, communicate early, go over these things, make sure that they understand, so that basically what the ultimate goal for us as lenders is when you go to that table, because the first thing the escrow officer does at signing, right, is they go over that settlement statement.
Yep.
And they show that settlement statement that is the same thing as that closing disclosure that they've seen at least 2 times during the process. And they received one within 3 days of going to that closing table. And if they can lay that down and you see that look in your borrower's eyes of like, oh yeah, I've already seen this.
Yeah.
That's satisfactory. We've done good.
Yeah. I had a closing yesterday, in fact, where the escrow agent pulled out the settlement statement and the closing disclosure and said, okay, do you want me to go through this detail? No, Kyle already took care of it. Where do I sign? Let's just get this done. I already understand everything on here, so let's just go. And so I know we do a great job in making sure our clients are never surprised.
Yeah.
Because honestly, that would keep me up at night.
No, man.
If I had a shock and awe at a closing table, that'd be terrible.
Yeah, because bad news travels a lot faster than good news, right?
It sure
if you have a
does.
bad reputation, it gets around a lot better faster than the opposite.
So you bring up a good point. Closing disclosure, loan estimates. These are the modes and the way that we communicate with our borrowers. Those figures what's the right word? In the official way, I suppose. And so we're going to ask you to review them, to sign them. Again, don't go so fast so you don't see those, where we try to do the best to communicate those, and then you show up and then you're like, oh wait, I never saw this. Like we've disclosed this. So keep buyers, pay attention to your closing disclosures in particular. Those are going to be pretty well to the penny what you're bringing to the table.
Yeah.
Should detail any seller concessions or credits, any lender credits that could be there, but it's going to detail exactly what your appraisal costs, what your title fees are, to the day, your escrows. And so, pay attention to those documents.
I think it's pretty important we point out, like you just said, that there's a lot of things that are fixed. Your appraisal cost, your escrow fee, the discount point. There's certain things that are fixed, but there are some things that kind of are like herding cats towards the end. And what I mean by that is it can change. And it's like, okay, well, we can't sign today. We're going to be out of town for these 3 days. Now all of a sudden you just push the closing back 4 days. Well, what does that mean to the closing?
A difference.
Yeah, four extra days of interest, maybe.
Yep.
You know what I mean? Or
Yep.
That's got to be collected at closing, or not.
Yep.
Either way, it's going to switch either way. And then there's just a number of little things that could change as we start moving the closing date around. So I think we need to make sure we communicate that piece to them. And really, it's pretty minor, but stuff that should be taken into consideration. So anything else you want to encourage our listeners or any people out there that are starting to think about buying a home when it comes to closing costs?
Just thinking back about my conversation with my son and his glazed look in his eyes, it was really funny, and I started laughing pretty good. But closing costs aren't the sexy end of the deal, right? Yeah. It's not what you look forward to, what you can't wait to get your hands on, but it's a necessary thing because it costs money to put a mortgage together.
Yeah.
And so I just continue to encourage our listeners to, find a lender that they can trust, that's going to be transparent with them, that will take their calls and answer their questions. I hate to say it, Dave, but an online lender where you're just calling into some data bank, if you can get a hold of them, they got to reference your file, and you may get someone new every time. But having a lender that truly knows the area, that's present, you can get on their cell phone, that has a lot of benefit.
Absolutely. Don't be bashful to ask the questions. Yeah. That's the hardest thing, is some people come into this process and no one wants to feel like the dummy. And we get these buyers that'll come in here and it's like, ask the question. Just ask. If you don't know, we're going to try our best to explain it, assuming, and we're going to take it from a very basic standpoint, but if they don't get it, ask, because we want to make sure they understand everything. So,
and I guess the other end of that is, if, going back to those two often questions we get, what's my rate? What's my fees? A lender isn't intentionally trying to be vague.
No.
They are going to give you the best shot in the dark they can, but not knowing exactly the situation. As we've discussed and looked at, a lot of these are dependent on what you want to do, what you're willing to pay for as far as reduction in rate, and getting quotes from several different providers that we haven't got that information from. And so, not trying to be vague ever, but it's a hard thing sometimes. Even with, the number of years of experience we have, we still don't know exactly what the fees are going to shake out to be.
Exactly. It's a moving target. I think that's the biggest thing. So anyway, glad we covered this one. It's been one we've been thinking, kick it down the road a little bit like a can, but we needed to talk about these things just to help create less confusion for the people out there listening. Now, obviously, Rogan gets to talk about some really fun, cool things on his podcast. We unfortunately get to talk about some other topics that aren't so cool and fun, but anyway, thanks for tuning in. Thanks for listening. Thanks, Kyle. Your input's always awesome. And let us know if we can help.